We're about an hour late this morning. Sorry, schedules are schedules, and sometimes they don't quite work. So anyway, okay, we're going to kick off. I promise it's going to be a very short one that we've done, shortest one in a long time, mainly because of the whole way I usually start with, hey, Jeff, how's the market? And I show the week over week lockbox things. They haven't even updated those yet. So we don't have that to talk about. So that's going to shave off a little bit of time. But that said, I want to talk about two quick things we're going to cover this week because it's pretty much what's dominating this industry right now. You've heard us talking about it before, and it's just something that's going to get talked about for quite a long time, or at least the first part is going to get talked about probably for all of this year and for quite some time to come. So, and I'll apologize now. We got tree trimmers in the background and Jeannie having an 80s fest in the shower in the other room. So I got a lot of background noise, so hopefully it's not filtering through. All right, so let's just jump in. Two things dominating the market you need to know about right now. Biggest one right now is inventory. We've talked about this before. Portland metro area ended the year about 3 weeks of inventory. The Vancouver markets ended about a little over 2 weeks of inventory last year. As of the end of January, we were at about a month and 3 weeks respectively for those two markets. And so probably in about, what's the day is the first, so week and a half, we'll have the stats out for the month of February. So we'll be able to see what that month looks like in terms of inventory and activity. Here's your spoiler alert. Turn away if you don't want this to ruin the game. Inventory is going to suck in February too. So here we go. Let's just kind of talk about, here's one of the big things that's driving the inventory crunch right now, right? It's a screaming good deal. Interest rates are stupidly cheap, right on pretty much the lowest that they have ever been, even though they are trending back up. So at this kind of thing in this article, they talk about as the hypothetical 2.7 type of a rate. Why not have two houses? Which is a ludicrous thing to say out loud until you realize during the COVID pandemic, people aren't traveling, they're not doing vacations, they're not really doing anything. God knows we're all just sitting at the house. As I think Jeannie coined the phrase the other night, family fatigue. You see the same faces every day, every night, and that's pretty much all you're seeing. It gets old, but you're saving a lot of money. So, hey, why not pick up an investment property? Rental market's strong. People want to get out of apartments. So people are picking up secondary homes. It's not just institutional investors. We see a lot of mom and pops. We see a lot of people. We talk to a lot of clients locally who are looking at investment grade properties for rentals. So that's putting a bigger crunch on what's already a crunch of chronic undersupply for the last 8, 10, 13 years in the market. And God knows for Portland, you just can't even build a house anywhere. There's no available dirt. There's just nothing out there. So inventory is a crunch. It's going to stay a crunch. I promise you we'll be doing this market update talking about kind of wrapping up the year in December. My bold prediction is by December, we'll be looking at inventory. I'll call my shot 1.7 months of inventory in December. So yeah, I think it's going to get a little better. Still, I don't think we're going to hit 2 months of inventory, which is still crazy. Balanced markets 4 to 6 months. So put that in perspective. I don't think we're even going to get halfway there. So anyway, so that's that. The side effect now of what we're seeing because of the inventory crunch, and people are still out clamoring to buy houses, is this is a national look, but I promise you the Portland graph looks a lot like this one too, is prices are just dominating upwards. Things are going incredibly fast. Give you a little bit of perspective. We had 2 listings that we put live, a week or so ago, and both of them multiple offers gone. So it's the multiple offer story. We're hearing it left and right, hearing a lot of people talking about there are a lot of crazy offers flying around. I don't recommend those. Jeannie would not either. Some of these things, no inspections and things like that. Now's not time to be stupid, but it is time to be creative and aggressive on your offer. So anyway, prices are up. They're going to keep going up. Seriously, if you can find the real estate, it's a great time to be buying it, including those investment properties. Second thing we want to talk about, and this is going to be the big one. And so I don't know any soft selling way to walk you through. This is the big story that's happening right now in real time. So I'm just going to just share this, I guess, so that number sucks, but get used to it. Mortgage rates are on the rise. I am already seeing people being quoted rates in the low 3s in some cases. There are still some high 2s floating around, but if you're sitting around thinking, I'm waiting for that 2.5 sweet spot to come back, Wave goodbye from the docks, man. That thing is gone. So yeah, threes. The threes are starting to. They're here. Whether you're seeing them or not, your mileage varies depending on income, credit, lenders, timing, luck, fortune. Whatever you want to call it. But start getting used to this number. It's been fun to look at 2.75, 2.5, 2.9, 2.8, 2. Because 2 feels good. 2 is free money. It's a great mortgage rate. Later, welcome to threes. Now let's keep this in perspective. Even if it gets to say 3.5%, that's stupidly cheap. It's 3% mortgage rate, guys. It's great, but this is going to be your psychological hurdle for a lot of people to get over. Is feeling like they missed the timing and they're going to wait for kind of the dead cat to bounce and get something back in the twos just to feel good. Even if it's a 2.99, at least you feel good about it. I don't foresee that happening. My big bold prediction here, if nothing else, is I think it's going to have the opposite effect. I think people are going to start seeing 3.1, low 3, kind of back to the threes. And people are realizing that ship is sailing, right? You see kind of the pricing graph as the prices are going up on homes. You're going to see same kind of trend line now for mortgage rates, a flatter curve, but still going up. People are going to recognize it's time, right? We've hit the bottom. Rates are going up. The longer I wait, the more expensive my mortgage is going to be for the next 30 years, 20 years, 10 years, however long your mortgage is going to be. And I think it's going to have that whipsaw effect of people say, now I need to hurry up and go buy my house. I need to scale up. I need to make that investment. I want to pick up that rental property. I want to fill in the blank, right? It's going to, I think, accelerate additional new incremental demand, which is going to even further hit inventory, which is going to even further hit pricing. If you were with us, I don't know, we could go 2 weeks ago, we talked about kind of maybe longer ago, kind of that what we call the cost of waiting, right? So now you've got a point where your mortgage rates are definitely going up, and you're going to start seeing prices, I think, probably accelerating, at least in a short-term period, because of this psychological kind of the panic, right? It's the law of limited supply and so forth. So it's going to enact people to jump. So I think you're going to see that double whammy as you wait. Your rates are up, prices are up. There you go. I'm going to just delete that slide because I don't want to see threes anymore. And so people put this article, and I'll give you a real summary. We don't have to read all these bullet points, but why are the rates jumping? And bottom line, the rates are jumping because people recognize vaccines are being rolled out, stimulus payments are going out. I think the $1.9 trillion package has been approved. Funds are going to be getting in the hands of people who need it. The economy is starting to get our legs back underneath us. They're starting to talk about putting kids back in school and the kind of the cohort process, part-time if you want to do it. And so we're going to start getting back to normal, which means high tides rise all ships. So things are going to start looking good. As that comes about, we definitely talked about this last week. One key word starts popping into the horizon now as the economy starts firing up with all this new government spending, with all the stimulus money, with everything else, inflation. And we talked about this. As long as inflation is dominating the headlines, it's going to put pressure up on bond yields, which is going to put pressure up on mortgage rates. So I think long term, we're headed up. Now, this is not just a U.S. phenomenon. This headline is also coming out, even the Bank of England. This is worldwide. The global economy is recognizing as governments have been stepping in to help keep people afloat during this pandemic. People recognize globally this is going to have an impact, right? So now they're talking about this inflationary tiger has awoken. So everything's being measured right now and monitored. In the U.S., we're not seeing signs of it yet, so that's good. Maybe it never really comes. I think that's wishful. So who knows? But this is on people's minds. People are expecting it. We've seen this kind of stuff before. So as long as that inflation is being talked about, those mortgage rates are going to rise. That's it. That's all we're going to talk about today. So 2 things, right? Your inventory, there is none. I don't see that coming around anytime soon. Mortgage rates, I'm not going to pull the slide back up. 3. So the threes are here. We're starting to hear about them a little bit here and there, and it's pretty soon it's going to be the norm. So buckle up, get ready. It's still an incredible time to be buying a house. Don't get that wrong. Don't get the wrong message here. Simply because I think long term, for the next, I guess, probably several years, we are going to see home prices continue to blow up in the Portland metro area. just from the lack of supply. We can't build anything else. And even at 3 or 3.5%, and I have a golden retriever jumping up on me. Even at 3 or 3.5%, it's still incredibly cheap to borrow money to buy a home, whether it's first home, second home, so forth. So that's your message. If you guys have any questions, comments, heckle us, want to tell me a new joke, send them our way. Put them in the comments. We'll get back to you. Otherwise, have a great week, and we'll see you guys next time.